Good afternoon. This is Chris Brecher with a Simpler Stocks free video for May 30th, 2016. Really, May 30th or 31st, we're going to be closed on Memorial Day. So this will sort of be taking care of like 3 days in there. Just so you know, the market today, right now, we're about 38 minutes before the close. I'm going to get on the live chat probably and jump in on the premium side and just go over the last half hour, see if there's some ways to prepare charts for next week. Right now, we have the ES up about 350. We have the NASDAQ up 11 and the Russell up about 7. Bonds down a little, gold down 11, and the dollar pretty strong. Basically, Yellen came out in her commencement speech at Harvard today at 1:15 and just came out and said that she expects that they're going to be raising rates for the next couple of months. Wasn't dovish, wasn't hawkish, just sort of pointed that it's going to be data dependent. So basically, the market's done nothing. The second she talked, just so you know, you had a little blip down right here, and then we came right back. So we really haven't done anything at all in here, so to speak, today. So the other thing you have to realize in here is on a daily chart, we're still doing this, coming up under the ATR trailing stop right at resistance and getting overbought. Now, there are a lot of people that are starting to think this squeeze that released to the upside means we should be wildly bullish. I'm still not convinced. But that doesn't mean, I'm not going to short. It just means I might not buy into this. We're right at resistance and overbought. Every other time back here that we've been at resistance and overbought, no matter how good it looks, then it falls apart. So I'm just going to wait and see if we can work off some of this overbought condition in a constructive way. Now, when we get this, you get things, I call them concurrent mode. So what that means is you watch the ES going up, you watch the NQ going up. Nothing's really diverging here yet. You have the NQ, ESs, Russell actually outperforming a bit, but they're all at these resistance areas, Dow Jones Transports and so on. So there's nothing divergence to speak of that would be turning us down just because there's a massive divergence like we had in December. And so definitely, and in August of last year. Now, one thing you have to realize in the TFs is here's the ESs on the left. As you see, it's near an all-time high. Right here, amazingly, because of earnings and all that, which aren't that great. You got to understand the Russell is at an intermediate high. It needs to break that so it could try to get to this level. And then if you zoom out, you realize it was even lower, even higher. So look at these successive levels that the TF, the Russell, is underperformed, while you have the ESs on the left basically at a new high. Now, what you'll see in here also is the NASDAQ also having a tier. Now, this is a little different. This is more like the SPX if it gets over this area. But as you see, this has successive tops in here that it needs to go up 150 points or 10% to be at the same spot that the SPX is. NDX has to go up about 200 points or about 5%. So we'll see what it does in the next couple of weeks. Like I said, I get very worried when we're already overbought in all these indexes. Like all these other times, people were bullish also, and we were overbought at resistance. So always keep that in mind in there. Now, what am I going to be watching next week? Obviously, you got to watch the big stocks. Number one, I'm going to be watching the bank stocks. If they tighten rates, I know there's some people that think that's going to make long-term rates go up. I think it's the opposite. If Miss Yellen shows a resolve to tighten, to keep inflation, a lid on inflation, I think that makes long bonds go down. And I'll tell you right now, who do you think's winning? Putting gold in there, and look what it's doing on a 15-minute chart. Tightening rates is anti-inflationary, and that's exactly what gold's showing. Now, if the long rate goes down, not up, then the yield curve flattens again, which is bad for bonds. Now, bad for Goldman Sachs. If you look on here, though, why is Goldman Sachs holding up today? Because intraday bonds are selling off, which is good for Goldman Sachs. Makes the yield curve steeper temporarily. Like I said, it's just not, this is only a 15-minute chart. That doesn't mean anything in the grand scheme of things. Now, when you go to a daily chart of the bonds, that could be a whole different animal. If it breaks down here and breaks under here, that means yields will go up sharply, which is really good for Goldman Sachs. Now, I'm not saying that's going to happen, but I'm just saying that I'm keeping my options open because those sort of things can happen. In the premium edition tonight, we're going to talk about individual stocks that had unusual option activity. We're going to show some of the FANG stocks, the Apples, the Googles, the Amazons, and see what we think of those. And we're going to just get a game plan for next week and go through different chart patterns. So I'm hoping you can sign up for a $7 30-day trial, which includes all the stuff we've been showing every day and let me show you in here because I'm pretty proud of it. Show the chat room, which we have live chat from 9 to 10 in the morning. Go over just strategy and also, see sample trades. Premium video, like I said, is a lot more in depth than this. Email alerts I'm very proud of. That includes me posting charts on index and futures charts and stock trades, mainly at the end of the day. Unusual option activity. I posted 2 good ones today. So if you get a chance, try to sign up and see those. I'm very picky about what I show, but usually what I show works out pretty well. Also in here, you get the forum where we can exchange ideas back and forth. A meetup where about every 10 days I do a learning session. And then those learning things go into the learning center where you go in here and you get all these with your subscription. These aren't downloadable. You have to have a subscription, but you get these then for free. They're anywhere from 15 minutes to an hour of going over my ATR trailing stop, MACD, and so on. So I hope you enjoy all these and can take us up on the offer. Last thing to mention, June 26th. We only have a couple of openings left. There's the Austin membership. It's a 3-day intensive course where we do live trades all the time. Sit and you meet and greet with us, hang out with us, sit in a room. We actually go over presentations. Really happy. There are 4 main presenters and they picked me to be one of them. So if you can get a chance, try to take us up on this. You go to simplertrading.com/Austin. As you see here, and I'm telling you, it fills up really quick. We only have a couple more spots left. So thank you very much for listening to me. Have a great holiday weekend. I will talk to you on Tuesday.